Hey guys and gals, this is Blake. Let me just make sure everybody knows. Sorry, I was running around some meetings this morning and I had to go shower. You guys wouldn't want to smell the way I smell. No, seriously, like jokes aside, I did have to take a shower. But, you know, living where I live, I actually shower like twice, maybe 3 times a day. They don't have to be like long showers. It's just, you get so gross this time of year. It's kind of, it's like a necessity. Last night I was so hot and humid. It was disgusting. Anyway, you guys don't need to hear all that. What you guys want to hear is what's going on in the market. So a couple things. Excuse me really quick, my nose itches. Okay, a couple of things. First of all, the euro is right around and holding around the breakout point. This is pretty important. For me, I bought the euro yen, so that's why I'm actually more interested in what happens to the euro dollar because I'm trading the euro yen. But with the euro dollar, it's really holding that support as it should, the 118 level. And as you can see, it hit the 127% extension, which you could read it here. The end of day analysis. This was on our blog, right? We are looking for the 110 level, or I'm sorry, the 119 level, which is just shy of that. Shy of the confluence right here, or just shy of the 38% retracement. That's where I'm thinking we're going to have a little bit of a struggle once we get up to the 119 level. I think that's going to be like the bigger issue for the euro dollar on this rally that we're seeing. But we're getting stopped up at the 127% extension, which makes a lot of sense. So what I want to see is this continue to hold up. And the reason why is I just bought the euro yen about 10 pips ago at the, so if you're not in the chat rooms, just so you can see here. I'm long the euro yen at 129.80, right? I actually think that that 129.80 was key. We overshot it obviously a little bit to the downside, kind of flushed some people out, got some people short probably on this break lower here, and then we reversed and we're trying to hold up. And the euro yen, as far as I'm concerned, as long as we're above this 129.75, 129.80 level, we should continue to press higher. This is a bullish breakout. You can draw the wedge like this, like that, like this. It doesn't really matter. It's just we're wedging and we're trying to break out now. So, and we're holding. The one thing that I also have to point out is stocks are holding up too. If you're looking at the equity markets and you're like, well, we're down a little bit, but we're really just kind of holding up, above 4,500. We're just consolidating these gains, which is scary if you're short, right? If you're short, you got to be like, that's not good. Look at the NASDAQ. The NASDAQ had this throw over this channel and we're holding above it. Again, if you're trying to short risk, this is not conducive to you shorting risk, is how well the stock market's holding up. How many of you, and I'm going to ask you this question. I want to ask you this question because this is a good time to talk about it. How many of you think you've seen a blow off top or capitulation bottom live? Like, you can go back and look in history and I can show you some, but how many of you have actually seen it happen? Anybody? Gavin, Mark Haynes, baby. Tom says he's seen them. I've only seen a handful, personally. Leon says too many, unfortunately. Hey, Leon. I mean, I've seen probably half a dozen, maybe, like like watching price action, you know. And the biggest like capitulation moves that I physically remember like watching, like the dollar Canadian right here back in 07. That was a capitulation move right there, big time. Crude oil was another one. That was whenever we peaked above 150, or I'm going 3-month chart right up here. I saw that one. You know, that I want to say I was around for the NASDAQ blow off top, but it wasn't really, you know, memory serves me correctly. And this is so long ago. I mean, you think about that, you know, that's 20 years ago. It's like, I don't really recall if that was like one day. That was over the course of a few days. Well, I guess it was one day. I mean, I remember the reversal. I remember like the days surrounding it. Tom remembers 1987. Yeah, I don't. That predated me. I was not around for that crash, and I know Leon probably was too. But the point I'm trying to make here is when you see like tops, like important tops or bottoms formed in the market, they tend to be in like this blow off top type of fashion, right? Or capitulation low. And you just don't see them that often. That's why when people say, Denise says, I was in the CBOE and at the options expiration pit or the OEX pit for the 1987 crash. Wow. You know, the thing is a lot of people use that term very loosely, and I don't, right? I don't. So, you know, for the last couple of years, I've thought at some point that this market is going to finish up on some sort of capitulation top, and it's going to be ugly, and it's going to look like, oh, you know what? Stan says silver a blow off top when approach 50. Yes, actually, silver and gold were. They both were, and gold when it hit 1800. And some of you guys remember when I was broadcasting at that point. And let's just go back to the charts here. So right here for gold and silver did the exact same thing. Back. That's right. Gold was more of a double top. I actually thought this was a blow off top right there. And then when we came back up again, I was like, no, you know, it was divergent, but silver probably looked about the same. I'm trying to think. I wasn't trading silver at the time, but I was, oh, you know, I guess silver would have been. Yeah. And I remember a couple, but see, I remember that. I remember these double tops here, right? But the point I'm trying to make is, you know, these, you know, a lot of people use these terms loosely. I don't. I've been around for over 20 years. You know, I started trading, like physically trading in 1996. So that dates me at about 25 years of actually trading markets. That was pre or after me being a stockbroker for like a year and a half. But the reason why I bring this up is because I've always thought we're going to see some sort of capitulation top versus just kind of grind it out to a high and then reversal. Unless there's some catalyst that makes us reverse, like, you know, credit spreads blow up or some, you know, some crazy, you know, just like you go, oh, you know, some black swan event. I didn't see that coming, that type of thing. Unless we see that, I think we're going to actually, the market's going to do one of these. And I've always believed that. And I think I've always believed that we were going to do a blow off top. And I think what stopped us a year and a half ago was COVID, right? So when we were, if you guys, you know, those of you like Leon and, you know, a few others that are listening in today, I know it's summer and, you know, we have low viewership. We don't really pick up in our numbers until after like the second week of September, roughly. That's when everybody's back from vacations and holidays and fully engaged. Anyway, but I know a few of you were probably listening to me a couple of years ago, and I really thought that, hey man, I know we were at the triangle top, or we were pushing some, you know, megaphone pattern resistance at that point, something like that. But I always like thought, hey, this thing is going to end ugly and it's going to end in a blow off top. But what happened was COVID. And I think COVID really extended the life of the market and also doubled us, you know, or you could say, you know, it was up, what, 25, 30% from the highs back then, 35%. I mean, that's all liquidity driven, right? So I still feel that this market is going to give us a blow off top. Do I know when? No. But what that really makes me do is be really skeptical of being short. Not until I see it, you know, not until I see us breach through these lows and get a nice daily or weekly close below that wedge. You know, I'm not going to get aggressively bearish. Although if we did break below that, I would get a we broke below that, I would get position in currencies appropriately by, you know, shorting the crap out of like emerging market currencies and you know, commodity currencies. But right now, it really feels like we're grinding up and we're going to do some sort of parabolic move. And maybe that, I think we're getting close. But getting close, guys, just if you think about it, right? Getting close could be this. You know, we're 2 weeks away, and then all of a sudden we do a, you know, up 7% intraday and then down 7% by the end of the day. And if something like that happens, then you know the highs have been reached, right? You know it. Once you have a big gain and completely give it back that same day, that is the blow off top. So give us a 5% intraday move and let us reverse it all by the end of the day. And you'll see in price action, you'll see the turnover, volumes go crazy, bids and asks cross. You guys that have been around long enough have seen it. You don't see it often, but the more this happens, the more we grind up and hold, I think the bigger the risk is of that happening. And I mean, I know we've said it for a long time. We are in a situation where no one believes the market's going to go down. No one. We've been that way for a while. And so that means it can persist even longer than where we are currently. But I guess I wanted to have this conversation with you because I look at the top of this wedge and I, you know, like you, I'm like, you know, maybe I should short risk up here because, you know, we hit the top of the wedge and, you know, we reverse. The apex of the wedge is getting narrow. And this, if you think about like the time it's going to take, let's just figure that out, right? These lines of the wedge would intersect roughly the end of December. Now, I sure as hell hope that we do not continue to grind up like this until the end of November, beginning of December, something like that. None of us want that. But we are getting narrow enough to the apex of that triangle to where a break is coming, right? So I guess the point I'm trying to make is here, be really careful. You know, I look at risk assets like just like you guys do, right? Like finally in currencies, you're seeing the Aussie, you know, shape up a little bit. Look, I think if we get a blow off top, let's just say it happened tomorrow. I'm not saying that that's going to happen. I'm just saying, let's just say it happened for argument's sake. Let's just say it happened tomorrow. The Aussie would do this, whoop, 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 right? It would look exactly like that. We'd go up, hit some pretty key resistance and get slammed down, right? That's what would happen. You know, you take like, and again, this is just a blow off top in risk assets. You would see the dollar Mexican peso, right? You and I and everybody else and their mother's brothers, uncles, monkeys, nephew. That's not so funny. that's not, wow, that is not so funny. Don't laugh. I know you're laughing right now. Like, sucker. Oh, man. Okay. Anyway, we're all looking at this big base in the peso, but what's to say if we had a blow off top that the dollar mex wouldn't just do this? Whoop. Right? Takes out all the stops below, for all the longs. That's the kind of stuff that like worries me about getting too positioned for something right now. That's it. But anyway, I wanted to have that conversation with you because I know you guys see it as, you got like these yen pairs. Like look at the euro yen. That looks thirsty for some highs, it does. I mean, we come out of that channel, it's trying to break some pretty key resistance here, some horizontal resistance. We are now making higher highs and higher lows. The guppy looks like crap. The Aussie yen, we're above trend line resistance. New Zealand yen looks pretty bullish here. Canadian yen, everybody's set up for a big head and shoulder pattern. Well, I mean, I've been looking at this possible head and shoulder pattern, but I'm not going to ignore that big false breakdown right there either, right? So Lorraine said New Zealand dollar. Yeah, I mean, look at the Kiwi. I mean, Kiwi. I mean, if we have like a blow off top, this thing would be like this. It would go whoop whoop, something like that. I mean, that's why I think you just have to be really careful. This is no time today, this week, even next week is no time to get in a position, let it really work against you. It's hard to make it back. Okay. Anyway, I'm just giving you guys some food for thought. I'm not trying to predict anything because I mean, what I'm trying to say is I don't think that a blow off top is like right around the corner. I think it's a lower probability in probability speak. Me personally, I have this gut feeling that I think that that's what we have to go through. And then the scary thing about that too is if we do get some sort of blow off top, and I'm just using this as an example, if the S&P like gives us a blow off top, like we do one of these, like in the next, let's just say week or two, we go like this. When we get a reversal, it's going to be ugly. And it's probably going to stick around for a while, meaning we're probably not going to regain it's going to look like Japan for 20 years, right? Anyway, that's the thing that scares the really crap out of me. And I know I don't want to be a Debbie Downer, but look, I got kids and I fear for them. They're teenagers. I fear for their 20s and 30s that we're going to be stuck in a rut for all intents and purposes, an economic rut for all this excess capital. Somebody's got to pay. Somebody has got to pay. Maybe I'm wrong. I hope I'm wrong. Let's just say it that way. I hope I'm wrong. Right. Tom says slow growth forever, Brock, you said quagmire. And Gavin said so many new investors, traders, et cetera, will never have seen anything like a blow off top either if it happens. Right. I mean, I think about somebody earlier said the Haynes bottom. Mark Haynes was like my favorite dude on CNBC. Love that guy. I mean, what a devastating day when he died. But he called it 666. It's the Haynes bottom. Right. He was there. I was watching him that day when he called it. And that was a capitulation bottom. And I was staring into the abyss that day. I think I bought the S&P, if I'm not mistaken, at like 760. And I put everything I had in the market, everything that I had, all retirement money. I had already been out and I put it all back to work at 760 in the S&P. And when we were at 660, let's call it 670, we were down like another 10%. I'm like, I thought the world was going to come to an end. Guess where I sold? 1,200, baby, like a rock star. I let it all go like a rock star. That's right, because I'm that good. Of course I've been in since then, but I'm just saying that's how I played that. Anyway, but the point that I think we have to make here is we are in unprecedented times with unprecedented like liquidity in the markets, and somebody has to pay. And I know people say it's future generations, and that really scares me. It does, you know. Anyway, I did not want to have this conversation today. I did not light up the mic to have this conversation with you guys today. Gary said, would a war put us in that scenario? I don't know. You know, I've seen like wars be beneficial for markets, so I don't think so. Yeah, and I don't. Yeah, Carl said war makes money. I agree with that. You know, actually, I had somebody text me. One of my friends text me 2 days ago, like pulling hair out. We're gonna go back and we're gonna go to war, and it's all to make money. And man, I can't really argue with that point. Although I just don't I don't know what the point of that would be, but other than, well, I mean, I know what the point. I mean, look, we could go in 1,000 circles. Ex-Marine, combat veteran. We could go into these conversations, and I really shouldn't. But I guess the thing is I don't know what's going to cause something like that, other than there's so much liquidity. And when the music stops, I'm so scared that people are going to be searching around for a chair in musical chairs, and there's going to be no chairs, right? Anyway, we'll see. I can pretty much tell you that this is the craziest thing I've ever experienced. And I thought the .com bubble was crazy. I really, really thought the .com bubble was nuts. I remember when I was 26 years old and I had my 1995 white cabriolet Porsche 911. And my buddies had a 911 Turbo, and another buddy had just a 911 Coupe. And we were sitting there at Houston's, a restaurant, and our cars were parked in valet. And we looked at each other. We're like, this is not going to end well. Here's a bunch of 25, 26-year-old dudes driving Porsche 911s. This is not going to end well. We were right. It's like a year later, but we were right. Right? Anyway. Lorraine said, are you totally on the side for now? As far as what? As far as cash goes? Yes. Yes, I am. I have been for this year, which has not been the right decision. It's not. But that's personally. And you don't know when that's going to end. And you don't, and you know what? Maybe we'll do this. Maybe we'll just peak and sit sideways for like 10 years. That's probably a more realistic outcome. Blow off top probably is less realistic. It's just something that I feel gut instinct that's going to happen. But probably less likely. What we're probably going to end up doing is just sitting sideways, working all this excess capital off for like decades to come, and we'll for the next 10 years we're going to be like this. You know what I mean? That's probably more realistic. Anyway, I don't know. I think way too much, and obviously we got to let price do its thing. And anyway, people are going to have a heyday with this one when they watch the recording. Okay, you guys have a great one, and thanks everybody for your support. And yeah, I'm long some euro yen. I'm long some euro sterling. Just sitting in it. Good luck, everybody. Thanks for hanging out with me today. I'll talk to you soon.